Hey traders, Todd Gordon here with TradingAnalysis.com. This is CNBC's Trading Nation. Traders, let's go to work in Tesla. I like the consolidation that we've seen over the last several months, and we've just broken higher on news that Pepsi is going to put a pretty big order in for trucks. So that was the catalyst we need to break out of the consolidation. As I just mentioned, we seem to have set a pretty good base around the 300 level. We're moving into a descending wedge, and you'll notice this kind of consolidation pattern has formed above the artist formerly known as resistance, now acting as support. So we should be able to push on up towards 400 in early 2018. As we get off the weekly, get down to the daily for a better view. There's a bit of work to do before we break resistance. And the way I want to formulate this is let's first come up with a trend channel that has contained 2017 price action. So I'm going to make a trend line here. I'm going to copy it, and then I'm going to drag it up to the highest price on the chart. This is the way you form kind of the boundaries or the channel that Tesla is being contained within. So the point at which Tesla needs to prove to you and I that it's ready to go is going to be right at about the $380 mark. Now, we're probably going to have to take this into 2018, and we will be facing earnings on February 21st. So what I'd like to do is put a trade that takes us up to that show me or prove it to me point that the breakout's real. Heading over into the options chain, I want to look at the Feb monthlies. Now, the earnings are on the 21st. These guys will expire on the 16th. So we will deal with it if the trade's working, if we want to extend the duration up and get some higher calls. But for now, let's take us up to that point. So we're going to buy the $375 call. We're going to sell the 380 because that's going to be our technical objective. Altogether, we're going to pay about $1.25 for this option spread. Now, I'll draw something to your attention down here at the bottom of the platform. It gives you the standard deviation. Now, this is going all the way back to math class in high school, but basically the option markets are pricing in basically a 50 to, it's actually more like a $60 move higher or lower over the course of the duration of these options. So there's basically a 68% chance that we will be between 292 and 396 at expiration of these options. So we are inside that expected move. So that's a safe place to be. So let's go ahead and put this trade to work. I'm going to get filled right around $1.25. I'll put this order in. Your fill will vary depending on at the time that you view this video and the price of the option. So I was just filled. I'm going to put a halfback stop loss on this. So I was filled at about $1.30, right? So if my option spread gets down to about 65 cents, half of the option premium that we just laid out is gone. Probably time to get out of the trade, contain the risk, and move on to the next trade. Otherwise, let's move for Tesla up to that 380 decision point. For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that trade in Tesla. Be sure to follow us at Trading Nation on Twitter for updates to this trade, as well as all the other trades and positions and markets our traders are watching. Have a happy end of 2017, and we'll see you on the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.